Hello, good morning. You're watching Buy Now Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good morning to you as well. Markets very subdued, nothing exciting happening on this happy Friday for us, but yes, what's the market looking like?
I don't think you can call it a happy Friday, Vinny, when you are expecting Reliance Industries earnings to come at 8 p.m. That's when the press conference is slated. But a very good morning to all of you all and also Vinny to you. And we're looking at the markets. Yeah, subdued trading session once again for the benchmark indices. Muted commentary or muted cues coming in from the global peers as well. So that's how the rub-off effect that you're seeing on the benchmark indices as well. We're just holding on to that near the day's lowest point as we speak. Flat trading moves coming in for the benchmark indices. Let's take a look at what Nifty Bank is doing at this juncture. There you go on your screen. Nifty Bank moving in tandem with the rest of the market. Advanced decline ratio at this juncture is actually in the favor of the declines. If you can put that up, there you go on your screen. As you can see, the advanced decline ratio as well, right now in the favor of the negatives. Talking about the benchmark indices or talking about the stocks that are gaining in trade today, you only have a handful of stocks that are in the positive territory. And one thing is very key to note is the fact that none of them are gaining in excess of 1%. So among the top Nifty gainers is BPCL and followed by ITC, Hero MotoCorp, Asian Paints as well as Kotak Mahindra Bank. As you can see, the gains are also pretty much muted sort of gains coming in for these counters. But on the flip side, it is Tech Mahindra. That's the top loser on the Nifty, 2.2% downtick coming for Tech Mahindra, followed by Tata Steel, Hindalco, HDFC Life as well as Tata Motors. Remember, the iron ore futures have seen their biggest drop in 6 months. On back of that, some of these metal names will also be under pressure. NMDC is a stock that you can watch out for on back of that drop in the iron ore future prices as well. But talking about the sectoral indices, and as I can see right now, you only have FMCGs that's holding on to good gains. Also, you have media index that's holding on to gains, and the defensives like pharma and IT also are barely in the positive territory. But on the flip side, you have realty index, the one that is taking a knock in today's trading session. 2.2% downtick coming for realty index, followed by metal as well as PSU Bank. So yes, Vinny, for now, on the benchmark indices front, yes, muted trade coming in, but a lot of moves in the individual names.
Absolutely. A lot of move in the individual names, but it's Friday and it's that time on the show that we have Pathshala, Buy Now Sell Now Pathshala. And as always, we have Kunal Bothra with us to give us insights on the technical front. Kunal, very good morning. And today, what is it that you're going to talk to us about in terms of the Pathshala? I can see down gap on the screen, but what does it mean? What does it indicate in terms of charts?
Good morning, Vinny. Good morning, everyone. Last week we were discussing up gap, and surprisingly, the markets were doing quite well. Today, I managed to just choose the topic of exact reverse of what we discussed last week, and that's on down gap. And surprisingly, the markets are down today. But then the key highlight for this downward gap is exactly an opposite of what we discussed last week. Last week we were discussing that how when there's an upward gap which gets created, the stock or an asset class or an index as such, it tends to go into an upward trend. The exact reverse or a contra happens in a downward gap mode. When the down gap gets formed, we expect the stock, the index to get into a downward trend for itself, and those resistances which are being formed by a gap, they are actually stronger resistances, which takes a lot of time for the stocks to break out. So we'll see two examples over here. The first example is TCS. This was in 2018-19 when TCS formed a down gap. This is the gap which we are talking about when the stock opened with a gap down, the high as well as the low of the previous two candles. That's the gap for the stock price. You see, post that gap down, the stock went into a further selling pressure. So imagine pre-selling, pre the gap, the stock was as it is into a downward trend. Post the gap down, the stock continued to go into a downward pressure. It consolidated over here. There was a rally in between, but that rally ended or faded just closer to the upward end of this gap. That's how difficult it is to try and break the gap when there is a strong selling pressure in the stocks. And post that gap of failure of this closure of the gap, the stock went into a further selling pressure, came back towards the previous close of 1700. This was almost a couple of years back. Same is the case with another strong metal stock, apparently Tata Steel, which has actually underperformed. So in the second example, which we'll see, the two down gaps which have been formed, and look at how crucial these gaps were for Tata Steel. This we are talking of in 2022. second half when most of these metal stocks were actually going into a decent correction as well as a post-correction rally for themselves. But Tata Steel underperformed, and majority of the reasons for that was because of this gap which was formed over here when the stock managed to break from 115 levels to 110 and below. It went into a further selling pressure. Look at the extent of the selling in a very short span of time, almost a replica selling of what happened for the stock just prior to the formation of this gap. Post that, there was a recovery as well as a rally, but again the rally faded closer to this gap for Tata Steel and the stock went into a selling pressure. So till the time the gap does not get filled, the stock remains to be under selling pressure. A very similar chart for Tata Steel very recently is the gap which was formed for the stock. That's why we say that when a stock is unable to fill a gap, it continues to remain into a downward drift. So the breakout point for Tata Steel, looking at this chart analysis, should be at 115 to 118 mark. The moment this upward gap is filled, that's where I think traders should try and jump in and look out for long positions. So that's a classical way of analyzing as well as looking out how to trade gap downs.
All right, so that's something new that you've learned today on this edition of BNSN Pathshala, and that is down gap. I kept thinking, am I reading it wrong? Should it be gap down, gap down? That's all I kept thinking of. But yes, this is a new terminology that I have learned today, and I hope it's benefiting all of you as well. But on that note, we will slip into a break on this edition of Buy Now, Sell Now. And when we come back, we will start taking all of your queries, so don't go anywhere. Welcome back. You're watching Buy Now on ET Now show, where we get you answers for all of your stock related queries. You can catch us live. We are live on Twitter as well as on Facebook. You can catch us live on your TV screen as well, and you can write to us on the WhatsApp number that will be flashing on the top of your screen. Do mention your name each time you write to us. Also mention the stock that you're looking to invest in. If you're already invested, mention you're invested in the stock. Mention your time horizon that you're looking to keep that stock in your portfolio, as well as your buy price and the quantity. In that way, our experts will be able to help you better. But let me bring on board our guest for today. We have Kunal Bothra, as well as we have Sneha Poddar, who's joining us for the first time on the show. A very good morning to you, Kunal, as well as Sneha. Welcome aboard Buy Now, Sell Now team. But before I come to you, Sneha, let me go across to Kunal. And Kunal, yes, markets are doing absolutely nothing. I think in a way also it's good given the fact that year has been extremely volatile. So some sort of, subdued moves are good for the markets. But what should retail investors do to make sure that their wealth is protected?
Well, absolutely, Cheryl. So given the state of the markets in the last many months, we've seen so many news flows happening into the indices, and now finally things are looking quite, positive and hopefully optimistic for the markets going ahead. And I think in this scenario, it's very, very important to have a very strong strategy where you are oriented towards building a portfolio, not looking out to scale extremely high leverage trading over here, because in these kind of circumstances is where new strong bull markets they tend to emerge. So I think in that aspect, it always makes sense to look out for trading more on the larger cap names. So an ideal portfolio distribution which we typically suggest is more skewed towards the large cap. So maybe out of 100%, you're looking at 60 to 65% investment on large cap names. Once that basket is filled, then we look out for advising on mid caps, and once the rally goes into a higher confidence mode, is where we advise going into small caps, where the trading activity would probably be more nimble footed. In this kind of environment, it always makes sense to reduce your leverage significantly, because that's where traders they generally tend to make a lot of mistakes. High leverage, they tend to make them cut their positions very, very early, and they're unable to ride the trends on the upside. So these are few pointers which I think every trader, long-term investor has to adopt, given the state of the markets we are into.
Okay, that's the word coming in from Kunal on how one should look at protecting themselves in this time and this sort of a market. On that note, let's get started with all your stock-related queries, and we will be taking your queries. You can WhatsApp us your queries on the WhatsApp number that is flashing on your screen. Sneha, very good morning, and the first query we have is coming in for you. This one is from Hemant. Now, he's holding 50 shares of HFCL, Sterlite Tech and Indus Tower, and all these stocks are currently making a loss for Hemant. Among these, which of the ones that they should continue to hold for the long term then?
Good morning. So basically, all these three stocks, which for like cater to the telecom sector. So telecom sector currently is facing a lot of issues and slowdown. And I would recommend to actually exit from these. Probably HFCL they can hold from a long term perspective, but if the view is from a short term perspective, say for 6 months or so, then it would be better to exit them and move to some other sector wherein the risk reward would be much more favorable.
All right, a quick note for all of our viewers. Please do not call on the WhatsApp number. We will not be able to answer your call or take the call on air. So do write in a message. And also, like I mentioned, please mention also your name every time you write a query to us. And this one is coming from Sunil Patil. And Kunal, has a call option of Can Fin Home of 500 at about 82.2 for the month of May. Will it give good profit is what is asking.
So it looks like a chart now after first. I think the first week of April rally for Can Fin Home from 520 to 580. The stock is going through a 5-6 days of mild correction. It seems that the correction is getting over because the stock is retesting the 2-day, 3-day swing low around the 550 mark. My sense is that if this 550 level is not broken, there could be a high chance that the stock may get into a recovery phase. So I think it could be a decent strategy of buying the call option. But my only concern is that what the rationale of buying a deep in the money call, it's as good as buying a future. So why not try and change the strike from 500 to maybe 550? The premium could be significantly less, as well as you're playing at the money for the options. That's the only tweak which I would advise for the viewer.
Okay, Sneha, the next query is from Bisakha from Kolkata, and they are a long-term investor and their vision is for 3 years. So is it a good time to actually buy Indian Hotels as well as Cummins at the current price for a long term?
Sure. So Cummins definitely one can look at from a long-term perspective because capital goods sector is likely to be a good investment bet given the thrust that the government has on the infrastructure development on the Make in India side in order to make India self-reliant in terms of manufacturing. So Cummins India definitely one can look at from long-term perspective. Indian hotels, I would say, not from 3 years perspective, but definitely from 1 year perspective, one can definitely look at because this year is supposed to be very good for the hotel industry. But then like one needs to really keep on monitoring when the demand slowdown kicks in. Taking 3 year call would be difficult, but then definitely it's a good bet from at least 1 year perspective.
All right, one more query is actually coming your way, Sneha, and this one is from Raman. He's writing to us from Chennai, and apologies, Raman, we've not been able to take your queries earlier as well. But he has Sundaram Finance as well as TTK Prestige in his portfolio. He wants to know whether it makes sense to add on to the exposure for both or in either of these counters, or should he switch out from one of them, Sundaram Finance and TTK Prestige. His perspective is for 2 years.
Definitely, he can take a entry into both these stocks because, as we have seen, NBFC so far has been facing a lot of pressure. But now, with the interest rate cycle, it seems to be stabilizing at this stage with the central bank likely to take a rate pause, if not like immediately, then probably after 1 or 2 more hikes. So, with the interest rate pause coming in, NBFCs would definitely be a good bet to enter into at this stage. And Sundaram Finance is one of the good companies, so one can definitely look at Sundaram Finance. In case of TTK Prestige, it's a slow and steady company with less risky bet. So if one prefers to have a low risk bet, then definitely one can hold on to TTK Prestige.
Okay. Kunal, the next query is from Sanjay from Telangana. This one is on HAL. Is it the right time to start buying HAL?
Well, I think the stock has not gone into a major correction in the last 1 week or so. The last time I think when we had advised the buy on HL was around the 2,500 mark when it had retested the 200 moving average. From there, it's moved up 10% higher from those levels. So a good strategy is that you wait out for the stocks to ease out, cool out, and come back to their key long-term moving averages. So I think in that case, I would suggest to wait out for maybe another couple of weeks or maybe a month or so. Let the stock cool off and come back towards the 200 moving average, or maybe closer to that 2,500 mark. That could be a better risk reward to buy HAL.
All right, and talking about HAL Defence Pack, there's another query that's come in from Subha Murli from Bengaluru, and Subha is a long-term investor. 200 shares of BEL at a price of 101 rupees per share. Kunal, for the long term, how are the charts looking for this one? I know you will not be able to speak about that long term, but for now, how are the charts looking for BEL?
Yeah, I think it looks attractive, Cheryl, for BEL. The risk reward is slight better than compared to HAL. For example, BEL, the previous major highs in 2022 was closer to 114 to 15 mark. The stock is at 103 levels. The recent low is around 90 odd for BEL, where we'd advised again a contra buy. So I believe again a similar strategy. If you're looking to buy, I would suggest maybe buy 50% of your expected quantity over here at current levels, but wait out for the retest of the previous lows or the retest of the 200 DMAs, which is around 93 mark for BEL. That could be another level where you may look to add on the balance 50%.
Okay, Sneha, this next query is for you. This one is on BL Kashyap. Now, Bhumana has purchased 1,000 shares of BL Kashyap at 35. Should they continue to hold this or sell this? They are willing to hold it for a medium term as well as of now.
Okay. See, BL Kashyap, as such, we don't have a coverage on that stock, but I would recommend to actually, look at some other companies in that space, like HG Infra, or for that matter, PSP Projects or PNC Infra, which are much better good bets in the infra space, given the kind of opportunity that is being present on the roads and highway side, as well as on the industrial project side. So my bet would be on these three names, but BL Kashyap per se, as such, I don't have a view.
All right. This next query that I have is coming in from Mr. Bide, and he has Hiranba above 300 shares at a price of around 600 rupees per share. For the medium term, Kunal, what should he do?
Well, I think this rally which you've seen for Hiranba in the last 1 week, 1 month or so, from sub 300 levels to now 370, I think that could be a zone where you may look to start booking out profits. Not sure, the stock would probably get into a major kind of a recovery. The volumes have been missing in this phase of upward trend. In fact, the sell-off which had happened for Hiranba, when the stock had fallen from 430 to I think 380 or 370 on a single day. From there on, the volumes have not been able to pick up. So which means that it's actually a sell on rallies rather than a buy on dips. That's why I would probably believe that use this current rally or a recovery for the stock as a good opportunity where you can look to exit.
Sneha, the next query is on HDFC Bank, and the viewer has 3,000 shares of HDFC Bank at 250 rupees per share. They are holding it for the last 2 decades. Now, obviously, should they look at booking some profits now and buy some other shares, or continue to hold HDFC?
One can definitely continue to hold HDFC Bank, and especially given their merger, which is likely to happen in June, July. So the stock is likely to stay in momentum at least till the merger developments are happening. And anyways, from a long-term perspective, this is one of the very good bets. So one can definitely look at holding this stock.
All right, this was coming from Karthik Raja, writing to us from Madurai, and he's holding Sun Pharma May Futures, Kunal, at 1,006, and the loss of 7,000, right? And the losses of about 7,000 is what he's saying. He wants to know, is it the right time to average? And also he wants some sort of stop loss and target for this one.
Yeah, I would not suggest to average the stock at current levels, because the recent rally for pharma stocks was on a very extreme kind of a mode. Now, pharma stocks are not prone to such kind of rallies for themselves, even if it's a short span of time, and they're bound to get into a time-wise correction or a price-wise correction. So I think purely because it's a first trade, I would suggest that maybe 990 could be a good stop loss. I think the stock is trading actually below that 990 mark. So I think if on an intraday basis, if it bounce backs towards the 990 mark, that could be a good level where you may look to exit. If you're not looking to exit the stock, then at least hedge it with buying a 990 put option. That could probably protect the losses in case if the stock drifts a bit more lower. But I think 990 and below could be a zone where you should not be look to holding on to long positions on Sun Pharma.
All right. On that note, actually, we'll slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of the stock-related queries. So viewers, don't go anywhere.
Welcome back, and you're watching Buy Now Sell Now on ET. Now let's keep it going with all your stock related queries. If you haven't sent us your queries, you can send it to us on our WhatsApp number that will be flashing on the screens. Kunal, this query we have is coming in from Kaushik Mitra from Mumbai, and they want to know on TVS Motors. Now they're making somewhere around 65% profit. So is it the right time to start booking partial profits in this one, or should they stay put right now in the stock?
See, I think you should stay put. Yes, the stock has gone through a bit of a correction the last 2-3 days, but I believe part reason for that was because of the deep overbought nature of the indicators for TVS Motors, and I think at this 1160, 1180 mark, it was actually tracking the stock. It was going into a bit of a stretched kind of a rally. So what you've seen is more of a retracement back towards the mean for TVS Motors. My belief is that possibly in the next 1 to 2 weeks, the stock should come back towards 1120, 1150 mark for itself. So even if you are a medium to long term investor, I think this may not be a good price where you should look to exit. Wait out for some recovery. 1120, 1150 zone could be a decent zone where you may look to reconsider and book out profits over there.
All right, moving on. Sneha, this one is for you from, I beg your pardon, from Anirban Dasgupta, writing to us from Kolkata. And he wanted to check if he can go ahead and look to buy Pidilite for the long term, and his long term is indeed long term. For 10 years is his time horizon. Also, he wants to know about Raj Ratan Global for a period of 5 years. He's already invested in Raj Ratan, but Pidilite is a fresh entry. What's your view?
See, definitely, Pidilite is a kind of stock which can be like, look for long-term perspective. And I mean, these are the kind of like, wealth creators stocks. They have done it in the past, and definitely they would continue doing it in the future. So there's no doubt about it. It's just at the and the stock has corrected also recently. So one can definitely look at entering. The company is always like making new strides and moving making a lot of acquisitions on the adhesive sides to strengthen its hold in the market. So definitely with the commodity cost coming down, so the cost pressures are down, whereas the demand is gradually reviving, and especially with the schools with the new sessions starting, and the demand for the stationaries and everything again coming back with the start of the new sessions. So definitely it's a good time to actually enter into the stock from a long term perspective. In case of Raj Ratan Global, it's a good bet, and one can definitely look at holding that stock. So basically, all the in fact, if you look at the auto and companies, they are doing really good because the demand has actually picked up very well, and it continues to hold pretty strong. In fact, from next year, 1 year perspective as well, the demand doesn't seem to be slowing down as such. In case of PVs and the CVs, demand continues to remain strong. So, if the demand from the OEMs are strong, then definitely the auto and companies tend to do good. So, it's a good, decent, small company which can be held in a portfolio from medium to long term perspective.
Kunal, next query is from SK Saran from Bangalore. This one is on Tata Motors DVR. Now, they've bought 500 shares at 20 rupees. Should they look to add more? If yes, at what price? And what is the target that one should be keeping for this one?
See, I would not suggest adding at current levels immediately, because you bought already at lower levels. It always makes sense to use corrections, to buy. For Tata Motors DVR, we were discussing this a few days back, that how the stock has a bit of a stretched discount with respect to Tata Motors. And I think what we've seen the last 4 or 5 days is covering up of that discount with respect to Tata Motors. So I think that has played out for Tata Motors DVR. I expect the stock to consolidate over here for maybe another week or so before it gets ready for another leg of up move. So would be bullish on Tata Motors DVR, but I would not suggest averaging out at current levels. In case if the stock dips in this phase of possible phase of consolidation, use that dip to buy or add further.
Okay, this next one is coming in from Sandeep, writing to us from Noida. He has 100 shares of Prince Pipes at the price of 500 rupees per share. How is this particular counter for a long-term investment prospect? What's your take on this one, Sneha? Because given the fact that he's already invested at 500 rupees per share.
Prince Pipe is a very good bet because, like, if you look at the pipe industry as such, the prospects are pretty bright. Given the kind of like the kind of demand. Um, okay, so basically the demand from the infrastructure side is pretty strong, and if you look at from the rural perspective as well, the demand from the the agricultural side is also expected to pick up. The raw material pressures which were there, that is also coming down, so the prices, the PVC prices and all are stabilizing. So definitely the stock had corrected, in fact, it's a decent correction and it has been consolidating for quite a long time. But then with the when we entering into a monsoon season, wherein the demand from the agricultural side is expected to pick up. So definitely, one can look at it from the immediate 6 months perspective, and from a long-term perspective, definitely given the kind of thrust that is there from the infrastructure as well as the kind of bright prospects which are there on the agricultural side. So the demand would remain strong, and even they have a good hold on the rural market. So the distribution reach is very strong for them. So definitely, they would be able to capture this demand.
Okay, Kunal, the next query is on Federal Bank. The viewer is holding 200 shares of Federal Bank at 141 rupees. What should they be doing with this?
Well, hold on to the stock. If possible, then look to add if the stock dips back towards 126 or 128 mark. In the last 2-3 months, that's been a major support zone for Federal Bank, where the stock has retested those levels and bounced off every time. Even though it's been actually making lower highs for itself, but we believe that that's a strong demand zone for Federal Bank. So I think 126 to 28 could be a zone where you can look to average.
Okay, this one is coming in from Mr. K. Parthasarthi, who is a senior citizen and a regular viewer of our show. He's writing to us from Chennai. And Kunal wants to know your technical view on ONGC. He's already purchased about 200 shares at a price of 145 rupees per share. And this he's purchased long time ago. So now he wants to know whether he should sell or look to add some more of ONGC in his portfolio. And also what sort of target can he look at for this one?
See, ideally, I've been tracking the stock very closely over the last 1 week or so, and I've seen this phenomena that just closer to that 160 mark, the stock somehow gets into a bit of a selling pressure, intraday wise as well as on a daily basis. So that indicates that maybe the stock is not yet ready for a breakout about that 160 mark. Ideally, in these kind of scenarios, what we expect is that the stock, post a few days of consolidation, actually falls down a bit and then gets ready for a breakout on the upside. Since your buy price is at 145, I would advise to stay put with ONGC. Even if in case the stock actually falls by say 3-4 rupees in the next few trading sessions, you should hold on to your existing quantity, because my belief is that once that 160 level is taken out for the stock, it could probably give returns of 10 to 15 rupees very quickly. So better level to exit or book profits on ONGC would be closer to 170-175 mark. Possibly in the next 1 to 2 months, you might see those levels.
Sneha Ghosh from Delhi wants your view on CG Power. They have 11,000 shares of CG Power. They're saying that they're making a huge profit at this one. They've not given any price for this. But would you suggest that one could look at buying more of CG Power for the long term then?
Yeah, CG Power, definitely one can look at holding from the long-term perspective, especially post the management change and the kind of kind of bright prospects that are being seen in case of the power sector, especially in light of the heat wave that we have seen. So the power demand is definitely on an uptrend, and it is likely to remain so for next at least 3 to 4. So, given both the bright prospects and the change in the management, one can definitely hold on to CG Power from the long-term perspective.
This one is coming from Ignatius, 12 shares of TCS at the price of around 3,673 rupees per share. Kunal, he's at a loss. He wants to now know what levels to average.
Well, current levels could be a good level to average the stock. Yes, the entire sector has gone through a lot of negative news flow for itself, but I think at current levels of 3,100 approximately, it's a good zone where you will look to start buying. The rationale for that is very clear, because on the daily charts, there's a phenomenon of RSI divergence which has started to shape up for TCS. So price wise, say in the last 1 month, the stock has made a fresh swing low, but on the indicator front, the stock has actually made a higher low for itself. That generally is an indication that a near-term bottom or medium-term bottom could be at place for TCS. So price wise, it's a good level where you will look to start buying.
Sneha Rohit from Oman wants to know at the current levels of the market and what is happening in the market for the long term, which of these stocks would be a good investment for the long term? That would be from Dabur, Prism Johnson and LT Foods. What would you be betting on for the long term then?
Okay, of these three stocks, I would bet on Dabur because Dabur is a very stable kind of company. See, in case of LT Food, the problem is it's a very volatile counter, and the rice demand, like it continues to fluctuate a lot, and moreover, it really depends upon the kind of the impositions that the government keep on imposing on the rice exports and all. So, LT Food is definitely a good bet from a short-term perspective, but not from a long-term perspective. So, Dabur is definitely. What was the third stock that you mentioned?
Foods, Dabur and Prism Johnson.
Okay. Prison Johnson, one can look at from a medium to say 2 to 3 years kind of perspective. But if the guy is really looking from say 5 to 10 years horizon he has, then Dabur India is definitely a very good bet. It has a very good hold on the rural market, and we are seeing some signs of green shoots in the rural market. Demand is picking up, though at a slow pace, but then definitely demand is picking up, and the company has really a very strong presence over there. It has some very really good products, and if you look at it, so the past history of say over 10 to 20 years, it has a very consistent kind of performance, the financial performance. So Dabur is definitely a very safer bet from a 5 to 10 year perspective.
All right. Given the fact that we are entering the last leg of the show, request our experts to keep answers a bit brief because so that we can accommodate as many queries as possible. We have a lot of them actually piled up already over here. Kunal, this one is for you. This is coming from Aryan. He's writing to us from Patna, and he's bought Reliance Industries at the price of around 2200 rupees per share, and he's looking to sell it at 2700 rupees per share. He's asking, is it okay, or should he look to square off? He's bought about 1000 shares.
I think you can continue to hold on. Again, I think Reliance is yet to deliver results. Not sure what would be the price action, or the reaction of the markets post the results. But the charts per se on the longer term basis look very attractive. The stock has established a good support at the 2,200 mark from where it bounced off start of this month. So I think putting all of those context, for Reliance Industries, I think it's a stock which you should continue to hold on.
Kunal, one more query coming your way, and this one is from Mr. Singh from Pune, and this one is on PDS Limited. They want to know technically, is it a good time to enter PDS Limited?
Apologies, don't track the stock, so I'll skip that.
Okay, Sneha, then I'm going to just come to you in terms of this query from Krish from Chennai, and this one is on, they have equal weight of Britannia as well as Tata Consumers. What is your view on these stocks, and should they add more of Tata Consumers?
Okay, so I would prefer Tata Consumer given the kind of management strategy which a company has. So basically, company is making a lot of strides into new products, and it is really going aggressive to expand its market into new categories like spices and pulses and all. So ready to eat kind of products. So Tata Consumer would be a very good bet because the alpha would be higher over there compared to Britannia, which is a kind of a very steady kind of business.
All right. This one is coming from Sabyasachi from Dubai. And Kunal, is it right time to buy Shree Cement, Tata Elxsi, Persistent, Maruti? Either one of them, or can he look to buy all of them right now? He has a good cost to invest.
So, Shree Cement, Persistent, Maruti, and the fourth stock is? Tata Elxsi. So Tata Elxsi I would avoid purely because I would probably expect the stock to go into a phase of very significantly low returns for itself over the near term as well as medium term, and possibly the stock may get into some bit of more selling pressure because of the way the stock has been sold, going into a downtrend from the 10,000 levels. From the other names, I think Shree Cement is something which is now looking as an attractive risk reward play. The stock has corrected quite aptly from the 27,000 odd mark to now sub 24,000 level. So risk reward wise, it looks attractive. Persistent is also a good stock, which I think has shown some good resilience over the last many months as such. IT stocks on a relative basis have come back towards a point where you may start to get invested into the stock. So I would probably expect Persistent to be so what you can do is do a staggered investment on Persistent. Maruti I would be a bit circumspect because I would expect the stock to remain as an underperformer. It has been an underperformer since the last 3 years. So it's very difficult to try and preempt that when would be an underperforming stock get into a breakout mode. So I would avoid Maruti. Instead of that, you can look at Tata Motors.
Okay, that's the view there. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with your stock-related queries after this break.
Welcome back. You're watching Buy Now Sell Now on ET Now, and let me continue taking the stock-related query. And Kunal, this one's come from Ramesh. He's writing to us from Coimbatore, and he wants to know about Gland Pharma and Thyrocare. What sort of an entry price should he aim at for both of these counters? Does it make sense to enter Thyrocare right now?
Well, I would suggest to wait out for Thyrocare specifically because the stocks doesn't seems to have settled into a trading range after that sharp selling from 1400 rupees to 400 or lower for Thyrocare. The stock has not yet gone to a time-wise correction. Possibly in the next 3 to 6 months, the stock may remain stagnant into this time-wise correction. So I think price-wise time-wise may not be a good level to buy the stock. Gland Pharma could be a different case altogether because the stock seems to have come out of a major correction. On the weekly line charts, it's on the verge of a breakout. So possibly if the stock closes about the 1325, 1330 mark today on the weekly closing basis, then I believe that there could be a confirmation that the stock may have ended its major trend. So Gland Pharma could be a better bet, but I think Thyrocare I would suggest to avoid.
Kunal, one more coming your way. This one is from Bhagwan Bablani from Mumbai. 300 shares of BF Utilities at 381. Can they continue to hold this for a period of 6 more months?
Yeah, you can continue to hold on, possibly under the 300, 305 mark. Look to average further. Try and bring your cost price back towards the 350 or lower than that. Because my sense is that the stock is going through a huge range consolidation. So 400 on the upside and 300 on the downside seems to be a range for BF Utilities. So buying or averaging at 300 could be a better strategy where you may get a better chance to either book the stock back at your cost price or get into decent profits over the near to medium term.
Okay, this one is from Suman. He's writing to us from Bilaspur, Chhattisgarh, and he has Madras Fertilizer, average price of 75 rupees per share, about 1,000 shares. He is continuing to hold on to this counter only because the stock had rallied a few months ago. Kunal, strategy to continue to hold on to it?
Yeah, I would suggest to hold on to it, but then have a trailing stop loss because these may be just very short-term oriented rallies for such stocks. Now, the concern for Madras Fertilizer is that over the last 5 to 6 months, if you look at the charts, it's been all over the place. So from 48 rupees, it went up to 96. In the fag end of 2022. From 96, the stock corrected back towards 54, 55 levels and has now come back towards 70, 75. So it's a very, very high beta, all over the place kind of a chart. I think it makes sense to book out profits sooner or later, or at least trail your stop losses over here.
Okay, on that note, let's get started with the rapid fire then. Sneha, the first query is for you. Is it a good time to buy Piramal Pharma? This one is coming in from Varun Kumar.
No, I would avoid it at current levels, given the high valuations.
All right, this one is coming in from Swati on AU Small Finance Bank. Kunal, how does this one look for a fresh investment?
Looks attractive. Closer to 50 mark is where you can look to start buying.
Hari Krishna from Bangalore wants to know, can they buy Sona Comstar at current levels, Sneha?
Yes, it's a very good entry point, and they have a very strong hold in the EV market. So definitely post-correction, a very good bet.
All right, a tough one, Kunal. RK is writing to us from Delhi. Between Varun Beverages and Devyani International, which one to buy?
Devyani International.
Sneha, Pawan is holding Exaro Tiles from the IPO price, and should they continue to hold or sell?
I don't have a view on it personally, but I think it's better to exit at the current levels.
Okay, Sudhir is writing to us from Mumbai, holding 60 shares of Graphite India, and he's bought it at 1,000 rupees per share in September 2018. Heavy loss coming in for this one. What should he do, Kunal?
I think you should look to hold on to the stock as of now, but wait out for a significant rally, maybe at 400 to 450 mark would be a better zone where you will exit.
Kunal, Dhananjay wants to know on PNB Bank, is it a good time to buy this one for the next 2 to 3 months?
Not for 2 to 3 months, but if your time horizon is 1 year or plus, then I think it's a good zone to buy.
Okay, Chandra is writing to us on Hindustan Copper. Sneha, 5,000 shares at 114 rupees per share. Makes sense to stay put with this one?
can stay put from a short-term perspective, but not from a long-term perspective.
Kunal, KB Rao from Hyderabad is holding 200 shares of HFCL. Should they continue to hold this or sell and switch to some other stock?
I would suggest to book profits.
Okay, this one is Franjali from Kolkata. Kunal, fresh entry levels for Tech Mahindra.
Well, I think 1000 levels or slightly below that could be a better level to buy. But again, I think a better confirmation would be post results. That's where I think you can look to time the stock better.
Sneha, Purnima wants to know on Fine Organics, 20 shares she's holding at 4,110. Is it a good time to make profits, book profits for this one?
I can say that Fine Organics is a very good bet from a long-term perspective. So if she can hold it for a long term, then definitely she should not book profits. Partially she can book profit and then enter at slightly lower levels, but it's a very good holding for a long term.
All right, and with that, we've actually come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Sneha for joining us on the show. And with that, we come to the end of this entire week edition of Buy Now, Sell Now. So it's goodbye from Vinny, myself, our producer Abhishek, and the entire team at the PCR.